right now is Kroll Institute's chief strategist, Chris Campbell. He's the former assistant Treasury Secretary for Financial Institutions. Chris, it's great to see you. Thanks very much for being here.
Great to be here. It's great to be in person.
Yeah, it is. Yeah. You're right. It's nice to gather once again. So you're expecting a half-a-point hike. What is the impact of that in terms of the economy? Where do you think the sectors are that actually see an impact first?
Well, first of all, I think it's not going to abate inflation. A recession. So I think we're likely going to hit a recessionary point. Again, higher interest rates are obviously going to drive mortgage rates down, and could also really affect the
mortgage rates up.
Sorry, real estate's up and drive real estate down. So, you could have a real challenge in the real estate market. It could have, and it's also typically, at least right now, it's trending that tech may struggle as well as the Fed tries to dial in their interest rates and try to get inflation under control.
Yeah, I mean, we saw last week the GDP and a contraction for the first quarter, 1.4% contraction in the first quarter. Now, I know that, that was the worst quarter in 2 years, but we're going to get a revision. So we'll see if we get a revision. Is there any chance we get a revision to show growth? That significant a revision? Or
highly unlikely. I think probably unlikely in my experience.
We've got a contraction for the first quarter.
We do. I think, yeah.
Do you think we're going to see a contraction in the next quarter?
I do.
How sooner? So then we're in recession then within 3 months.
I do. Yeah. I think unfortunately, I think we're heading that direction. I think that the Fed Reserve, Chairman Powell, great guy, someone who worked with our Treasury, but has he's a slow and steady guy. It's a consensus builder, and I think he'll hit the 50 bips, that we expect in the next couple of days. Over the next day or two, and then we'll see how it goes. But yeah, we're gonna be some difficult times there in the economy.
You really studied and worked on financial institutions at Treasury. What's your sense of the regulatory environment? Is it getting tougher here for financial institutions, you think?
Yeah, look, I think that across the board, the financial regulators are rechanging and recalibrating in a way that makes it more difficult for financial institutions. I think that no one wants consumers to be harmed, and obviously regulations can be good. Overregulating can be difficult, though, and so we've seen a lot of challenges as the SEC and FDIC and Fed are moving in a direction that's certainly opposite of where we were at our administration.
And Chris, what do you want to say about inflation and the supply chain issues? We've been showing this graphic of where all of the tankers are stuck in the water, unable to load and unload around Shanghai. That's obviously been an issue for earnings and for the economy. And inflation is at 40-year highs. You've got everything costing more money. Do you see any alleviation there?
I think it's really important to note that the Federal Reserve and policymakers in D.C., there are a lot of things that are absent with their control of what's going to drive the economy and certainly inflation. And so, again, you mentioned supply chain, which is a really good example of this. Russia and Ukraine is going to be another example. It's outside the Federal Reserve's control and outside of Washington, D.C.'s control. And I think with some leadership from D.C., I think we may be able to get supply chains under control. But there's a lot of external factors still driving the economy that they're going to force the economy in some really troubled times over the next several quarters.
The news is not good.
No.
Unfortunately. Chris, it's great to get your insights.
Good to see you.
Thanks very much.